What is going on, everyone, and welcome back to the channel, Explain the Charts. Today is October 8th, 2025, and we have a very timely and crucial update on Tesla, ticker symbol Tesla. The big news driving the price action is the launch of the new, more affordable Model Y and Model 3 vehicles. Tesla priced the new Model Y at just under $40,000 and the Model 3 at just under $37,000. While this was anticipated, the market had a classic sell the news reaction, with the stock falling solidly yesterday after jumping on Monday in anticipation. Many reports suggest the prices were higher than investors had hoped, leading to disappointment. This move is seen as a strategic response to the expiration of federal EV tax credits, which is causing concern on Wall Street about future demand. The analyst community is sharply divided on this news, creating a fascinating battleground for bulls and bears. On the bullish side, Wedbush Securities is standing firm with an outperform rating and a massive $600 price target. They see this not just as a move to stabilize delivery volumes, but as a critical step towards an AI-driven revaluation of the company. Wedbush highlighted the rollout of full self-driving version 14.1 and progress on the Cybercab project, predicting Tesla could reach a $2 trillion market cap by early 2026. They are telling their clients that any short-term weakness should be seen as a buying opportunity. However, the bearish perspective is just as compelling. Gary Black of the Future Fund warns that these aren't truly new models, but rather stripped-down versions of existing ones. He fears this will cannibalize sales of higher-margin vehicles and won't actually drive new, incremental demand. Black points to 2023 and 2024, arguing that Tesla's price-cutting strategies have previously failed to meaningfully boost growth compared to the broader EV market. So, with that conflicting backdrop, let's dive into the charts to see what the price is telling us. Here on the daily chart, we can see the bigger picture story of the past year. After bottoming out in early 2025, Tesla went on a monstrous rally, peaking in late 2024 near the $488 level. That $488 high is now the key long-term resistance level that bulls are dreaming of. Since that peak, we've seen a significant pullback and consolidation. More recently, the price rallied strongly through most of September, which we can now clearly attribute to the market buying the rumor of this new model announcement. The price surged from around $350 all the way to over $470 in just a few weeks. However, the last week has been extremely telling. We see a massive red candle on October 2nd, which was the first major wave of selling, and another one yesterday, October 7th, directly following the announcement. This action establishes a clear short-term resistance area around the $453 to $455 zone, where the stock peaked before yesterday's drop. On the downside, we are currently testing a support area right around the $430 level. If this level breaks, the next major support zone to watch is down around $420, which aligns with previous consolidation in late September. Now let's switch to the 1-hour chart to get a closer look at the recent volatility. Here we can clearly see the price action around the announcement. You can see the steady climb on Monday, October 6th, followed by the gap down and sharp sell-off yesterday morning, October 7th. The price fell from above $447 all the way down to a low of about $432 in just a few hours. Since hitting that low, we've seen a bit of a bounce, but the price is struggling to reclaim the $440 level. This hourly chart shows that $432 is now our critical immediate support. A break and close below this level on the hourly time frame would be a very bearish signal for the short term. Conversely, the bulls need to push the price back above the $440 to $442 area to show any sign of strength and begin to reverse the immediate downtrend. Finally, let's drill down to the 15-minute chart to see the very latest price action from yesterday's session. We can see the intense selling pressure during the middle of the day, with high volume on the candles moving down. Towards the end of the day, the price tried to stabilize and formed a base around the $433 mark. It's currently in a very tight consolidation pattern in post-market trading. This pattern is crucial, Traders are watching to see if this is a base for a reversal back up, or if it's simply a bearish consolidation before the next leg down. The lack of a strong bounce into the close suggests sellers are still in control for now. Any break below yesterday's low of $432.45 on this time frame would likely trigger another wave of selling. So, let's recap and put it all together. The bullish case is that this is a healthy, news-driven pullback and a buying opportunity, just as Wedbush suggests. Bulls are betting on the long-term AI and FSD narrative, and they want to see the price hold this $430 to $432 support level and quickly reclaim $440. If they can do that, a move to retest the $455 resistance is possible. The bearish case is that margin compression and demand worries are very real, as Gary Black points out. Bears are looking for a failure at the $440 resistance and a convincing break below $432. If that happens, a slide down to the next major support at $420 seems very likely. So, what are the key levels to watch? Immediate support is at $432. Below that, the next major support is at $420. Immediate resistance is the $440 level, followed by a more significant zone at $455. The ultimate resistance remains the recent high near $488. Given the negative price reaction and the valid concerns about demand post-tax credits, I believe a test of the $420 support level is more likely than not in the coming weeks, let's say a 60% probability. This scenario is reinforced if the price continues to fail to break above $440 in the next day or two. A period of choppy, range-bound trading between $430 and $450 is also quite possible, maybe a 30% chance, as the market digests the conflicting analyst views. A strong, immediate bullish reversal breaking above $455 seems the least likely scenario right now without a new catalyst, at around a 10% chance. Looking ahead, the key things to watch will be Tesla's next earnings report for guidance on margins and any hard data on FSD adoption that could validate the bullish AI thesis. Please remember, this is not financial advice. This video is for educational purposes only, and you should always do your own research before making any investment decisions. Thank you for watching Explain the Charts, and we'll see you in the next one.